will ask our RTD General Counsel to make that telephone call. And any medically trained individuals in the room are respectfully requested to assist, and if needed, an AED is in a glass case located just outside this room on the wall to the right. And in the event that an evacuation is necessary for any emergency, please calmly exit out the door you came in at the back of the room, go up the stairs to the first floor, around the security desk, and out the door that you likely would have come in the front. And police and security officers will be there to direct you to a safe meetup area. Anyone needing special assistance in the event of that evacuation will be assisted by RTD staff as necessary. And while RTD takes every precaution to ensure the security of its passengers, vehicles, and facilities, the agency relies on both staff and the general public to be aware of and alert to any suspicious or dangerous activity on buses and trains and around stations, stops, and platforms. And as such, I would encourage all RTD employees and patrons to download the RTD Transit Watch app, which allows users to report suspicious or dangerous activity and communicate directly with transit security personnel on a real-time basis in the event of an emergency situation. And this is available on the Google and Apple app stores. Tonight doesn't happen often. We don't have any actions tonight, but we do have a number of important updates. The first one, I will yield the floor to you, Mr. Chairman, to walk us through that.
Thank you very much, Mr. Chairman. For the sake of the record, we previously submitted to the board the description of what we have for shorthand called the Litigations Ad Hoc Committee, a committee that the chair has appointed himself and the first vice chair to as chair and vice chair respectively of the ad hoc committee. Pursuant to and consistent with the obligations of the chair in doing so, we have drafted a committee charter. This committee charter has been circulated amongst a number of board members who had expressed an interest in it, and we believe that it captures all of the necessary requirements of the rules and addresses any issues or concerns that directors may have. This is not something that comes before the board for approval, but because I have made an effort at all times to make certain that we have communicated and collaborated fully with all members of the board, we bring this to your attention, and we'd be happy if you have any comments to take those comments, and if further revisions might be appropriate, I would be happy to consider those and draft those with the board office. But my hope is that this captures the spirit of what we're trying to do, which is to be able to come back to the board on a regular basis and say, okay, here's what's going on in these major litigations, and give you an informational report, typically in executive session, but perhaps not. So that's what we have presented, and to the extent that you do have any comments, please feel free to share them with me or with First Vice Chair Catlin at any time, and we'll see about incorporating those, and I'd be happy to answer any questions. Thank you very much, Mr. Chairman.
I see one question. Director Lubow.
Thank you, Chair Mihalik. And thank you, Chair Tisdale, for doing this work. I appreciated being kept informed and actually having some ideas incorporated in this. A question that I had is that from what you were describing, you know, the purpose of it would be to come back and talk to the board about what's happening. But we get that from our general counsel, too. So could you distinguish? Thank you.
Thank you very much for the question, Director. Mr. Chair, if I may respond, that's an excellent observation because, no, we are not here to provide the general update as to the litigation, but to provide the oversight to say, all right, two independent people have looked at what General Counsel is doing and what the attorneys are doing. Gosh, we think we have an issue with attorney's fees, or no, we don't have an issue with attorney's fees, or some reporter has made some allegation about something, we've looked into it, we don't think it's grounded. So more as, I guess you might even think of it as an ombudsman role, rather than the regular reporting, because the General Counsel is obligated to provide regular reporting and does so. But it was suggested that two independent people might also provide an oversight, have a direct communication with General Counsel relative to these matters, and then be able to report to the board so that the board has assurance that other eyes, other than just the General Counsel, have looked at it.
Okay, thank you. And I want to reiterate that this isn't a decision-making body in any way. Okay, thank you.
Yes, I think we say that actually 3 or 4 times in the charter, yes.
Okay, thank you both. Director Folska, I'd like to recognize you if you have any questions or comments on this update.
Thank you, Chair Mahalik. No, I do not.
Okay, thank you. I don't see any other questions on this topic, so we will move on to our next item, and it is the third draft of the midterm financial plan. And Mrs. McKillop, I understand you're going to be here for the next several of these, and so I will let you proceed.
Okay, with that, I'll be glad to turn it over to Jeanette Scarpino, and she's going to walk us through the latest update to the midterm financial plan.
Thank you. Good evening. I'm going to skip a few slides here because this is not new material. I thought, so I said. Yeah. Oh. I think it is on. Looks like it's on. Yeah. Oh, okay. Thank you. Okay. We're getting there. Yeah. We're getting there. One too many. Sorry. Okay. All right. I just want to touch on some areas of new information. We mentioned that we may have the opportunity for a diesel fuel lock. Today, I received a price for 2020 for diesel of $2.10 should we lock today. However, the price is fluctuating rapidly. So this will likely not hold. I'm just presenting this for informational purposes. The third draft is balanced. And really we got there because of the next section, and that is that we have been prioritizing our capital and expense projects. And the third draft for the base system, I'm only talking base, solves for the $32 million gap that you saw in the previous version. And we did that basically by deferring the bus fleet. We deferred a whole group from 2020 and 2021 to 2022, and then again from 2022 and 2023 to 2024. We are also, as part of the plan, issuing $30 million of new COP debt in 2022 to finance purchases of buses. That is the maximum amount of debt we can issue and still maintain our debt service coverage. So while the plan is balanced in this third draft, I need to say that it may require further changes in the final draft. We may have to move additional components and elements around. So the final draft may look different. There we go. Okay. I also want to touch on the revenue assumptions. As regards passenger fare revenue, we have assumed a 10% fare rate increase in 2022 and 2025. Also, in this draft, we are adjusting for the delay in implementation of the past program price increases, and that had an effect, as you might imagine. With respect to sales and use tax, the forecast is a 4.4% increase in 2019. Through May, we have seen our collections rise 3.3% over last year, and June, the number is 3%. So we are going to have to make up some ground here. You've seen this before. Okay, again, debt financing, we are looking at issuing new COP debt in 2022 to finance fleet acquisition, and we also have opportunities to refinance our existing debt, and we are beginning that effort. Reserves, I want to touch on this. We, of course, are looking to reach our goal of 3 months of operating expenses in our reserve balances. The base system reaches the goal, we think, in our current plan. We're still working with the long-range plan, but that will happen beyond the year 2025. Fast Tracks maintains this goal through this 6-year plan. Also, the Fast Track's internal savings account, we will likely have to draw down funds from the FISA in 2025 to support corridor operations. Sorry. So if we look at the cash flow here for the base system, the only lines I want to point out to you are line 6, which the adjustment to balance is now blank. That indicates to us that it is a balanced plan. And also line 38, the unrestricted year-end fund balance, it is either positive, well, it is positive. We strive for a $2 million minimum balance there, which the plan maintains through 2023, and then the plan is able to generate cash flow beyond that level in 24 and 25. Here we graph the sources and uses for the base system for the year 2020. Fast Tracks update, again, we are using the FISA for Fast Tracks operations in the years 24 and 25, but we expect to be able to repay the FISA over the term of the long-range plan, and that repayment takes place in 2026 through 2031. We'll talk about that next. The summary cash flow for Fast Tracks, again, if you look at line 27, that is the unrestricted year-end fund balance, a little bit stronger than the base. And then finally, the next steps. In September, we will present the final midterm financial plan and the second draft of the long-range financial plan. We're presenting the first draft of the long-range financial plan tonight. We will bring the first draft of the 2020 budget forward. On September 24th, we hope for adoption of the midterm financial plan. On October 29th, we hope for adoption of the long-range financial plan. And then finally, November 12th, we will present the final recommended budget for 2020. Can we take questions from anyone?
Director Broom, you are first.
Thank you, Chair. I had a couple of questions. When will we get our next update on sales tax from CU?
That will be in September. We will incorporate that into the 2020 budget.
Okay. And then could you speak to how much we are funding our pension obligations? Has that increased from last year? And do you have increases built in future years?
We anticipate about $1.5 million increase from 2019, and we will build that into the plan. So it may be a change that needs to be made yet. for the salaried pension plan.
Thank you.
Thank you. Director Lubau.
Thank you, Chair Mahalik. Hi, Jeanette. Thank you so much for the presentation. I have a question about the capital expenditures. Are we going to see what the final, what they look like at the final presentation? How does it work?
Yes, we always present a list of the capital projects that made their way into the midterm financial plan, and we included with that is a project description, and we show the dollars over the 6-year period. We have traditionally also given a list of deferred projects, those that we could not fund in this plan. I think someone else asked for that, so we can provide that as well.
So we will get that as we vote? We'll
Correct.
see it as part of the
It'll be
vote
part of the
process.
final presentation.
Yes, thank you so much.
Thank you. Director Walker.
Thanks. A couple of questions. One is, so with assuming 10% fair rate increases, we're looking at 330 in 2022 and 363 or something like that in 2025. Usually when we have a fair change, some prices go up, some fares go up, some fares go down. So this is like a two-parter. One is I'm wondering if staff is looking at ways that will happen in these next coming fare discussions about what rates might fall, which region, or pass supplements or new passes or fare structures might occur. I'm wondering if that's being discussed now.
Yes, it is. So for purposes of this document, we just do the flat percentage. We don't make those assumptions at this time. But as we get closer to that process, we're looking at that. We're also looking at it in context of moving from our current system of collecting fares and ways of paying for it. We're moving to the account-based system, which also will have us look at that fare structure. And we've also been asked, and we're going to have that conversation next month in September, about the policy on having fare increases every 3 years. So all of that will have an impact on this, but this plan will be approved we need to have that approved prior to that discussion taking place. And this, whatever the board decides, will affect the budget going forward and the midterm financial plan going forward.
Okay, thanks. And then I'm also wondering, because it says fair rate, I'm wondering if that should be changed to fair revenue, because not all rates increase. It's actually the revenue that is.
That is true. It is as you mentioned, sometimes the local goes up differently than the regional, differently than the airport at different rates and that type of thing. So yes, it's the fair revenue that we're anticipating increasing by that percentage.
Yeah.
But that's a little bit of a semantics discussion, because there has been a board member who thought that fair revenue increases corresponded to higher ridership. So we've tried to say we're talking about rates, okay, what we pay to take transit.
Okay, and then thanks for the explanation. I'd forgotten that. And then one other thing, so summary cash flow, fair revenue, 2020 and 2021, under fast tracks, it goes up by $2 million. And in fair revenue for base system, 2020, 2021, it drops by 0.3 million. And if you explain that, I missed it, but I'm wondering how can it stay flat for base and increase for
So it's
fast tracks?
depending on where the ridership is. So our ridership increases are occurring and mainly due to North Metro projections in those years, because we're going to open North Metro in 2020. Those are a result of that, where we're not expecting those ridership increases on the base system as much. And also the shift between where people are riding and the more revenue is being generated on the fast track than the base system proportionally.
Yes, thank you.
Thank you. I don't think I quite followed that, but Director Geisinger, you're next.
Sorry. Thanks. This is great. I'm always amazed at how much goes into this. And I apologize if I missed this in here, but if we're assuming a rate increase in 2022 and 2025, what's the ridership assumption? Does it stay flat?
Do you want to add?
Largely flat for the base system, largely. We will see increases in fast tracks in accordance with corridor openings for the most part.
Okay. And this might be a rookie question, but a couple places in this and in the long term, page 17, I think it says continued growth through savings from rubber tire service increases. Can you just tell me what that means, please?
So this is the conversation we had as part of the unfunded corridors for fast tracks. So there is a transfer. I don't know if it's a transfer, but there is basically a transfer, an offset probably is a better word, yes, whoever said that, of funding that the money that was to go for growth in rubber tire service is being capped basically, and that money is then being put into the FISA. And that decision was made, I believe, in 2012. Is that correct? Right around that time frame. So, so that when we reference the rubber tire service, that's what we're referencing. And there's actually a line in the each of the charts that show that offset occurring.
Okay. Thank you. And then on packet page 23, it says the Tabor exemption on the base system expires 12/31/2024. Do we, I know it's tricky, it's a moving target, but is there something we're calculating in here as a result of that?
No. We have tried to make that calculation, but it's virtually impossible because we need to know what the property values are the year before that occurs. And then based on that, we're able to do the calculation. So we can make some assumption about property growth, but if we happen to have a down year between now and then, that could change the entire assumption from going from a non-refunding situation to a refunding situation. So we won't know that till we get much closer.
Thank you.
Okay, thank you. Chair Tisdale, you're next.
Thank you very much, Mr. Chairman. Just very briefly, if you look at, there are two summary cash flow charts, one on page 18 for the base system, one on page 22 for the fast tracks. And I just want to confirm, because there are perhaps some who might be confused by this, and I thought let's put it on the record so we know. The one for the base system is the third draft, and that was because there was additional work that was needed in order to balance that out. The one under fast tracks is labeled as the second draft, and that's intentional because that one did balance out in the second draft. So there's no mistake about that. There is no confusion in our minds that it's simply the base system took 3 drafts to get to that, and the fast tracks took 2, and there may be further revisions beyond that. Is that correct?
That is a correct statement.
Thank you very much.
Thank you for that clarification. Director Rivera-Malpiede, you're next.
Thank you, Chair Mahalik. Just 2 things. The first one is what are the rider projections then, piggybacking on Director Geisinger for light rail?
What are the ridership projections?
Yeah,
I don't
for the
have
light-
those in front of me, but we can get those for you.
Okay, great. And then the second one is, can you talk a little bit about the cost for fuel? Because you had said 220, and I'm seeing that there might be some challenges in 20 to 25.
Mm-hmm.
And when do you lock that in?
Right. The budgeted price that we're using in the plan is $2.30. That is also the lock price for 2019. What we're seeing for 2020 right now is if we were to lock today, we don't have a contract in place, we would have to take some steps to effect that. But if we could lock today, we could possibly lock at $2.10. The difference in the forecast is not insignificant between those two amounts. Could be anywhere between $17 to $20 million effect in the first year of this plan. Okay. The other question you asked, when do we normally lock? That really is a decision that's made by the general manager and senior level. It is would not be unusual for us to lock now, for example, if we found a particularly good opportunity. We tend to really focus on that in the fourth quarter. Tell me if I'm wrong. If you want to add to that, that's fine. But it is a decision that is made by the general manager.
So I'll just add, sure, we tend to look at it after September, after the Labor Day holiday, because prices tend to drop after that period of time. But like last year, it was so volatile, it was moving day by day, which is what it's doing right now if you've seen the market. So we'll continue to monitor. If that gets close to $2, we'll probably seriously discuss pulling that trigger now prior to that date. But typically, we see prices go down after the Labor Day holiday. The problem with the last couple of years is that they have gone down, and then we've had some kind of natural disaster like a hurricane or something else that has affected crude oil production, which has then driven the price up again. So it's a interesting process we go to monitor that, but our procurement staff monitors that daily for us.
All right, thank you.
Okay, thank you. Director Catlin, you're next.
Thank you. Heather, or Jeanette, either one. I noticed that you said that the goal for reserves is 3 months of O&M cost in 3 reserves, one of them being the unrestricted fund balance. And for the Bay system, it's quite a bit more than for the fast track system. Can you explain why? And then a second question I have is that for the FISA, we are actually drawing down the savings account to support corridor operations. And are those tied at all together? The unrestricted fund balance and the FISA savings account?
The operating expenses on the base system are quite a bit larger than what we see on fast tracks. So the base tends to incur, it is the base system, the existing system prior to fast tracks, tends to incur the bulk of repair and maintenance, capital expansion, that sort of thing outside of fast tracks. So the costs of actually operating fast tracks are lower than what it takes to manage the base system. Most of the overhead is captured in base, for example. So that's why the numbers are larger. So that target is going to be larger and more difficult to reach. Okay.
And then let me answer the second question for you. Is it related to the FISA? And the answer to that is no, because the FISA has a very distinct list of things that we use to fund it. And so based on that, we then move the money. So whether it's from a property sale, which is one of the big areas besides the bus piece of it, those are the 2 main funding sources right now for the FISA. But we don't move unrestricted reserve money into the FISA or vice versa unless we need those funds to cover operations or construction.
Okay, that did answer my question. Okay. Thank you.
Thank you. Director Lubow.
Thank you, Chair Mahalik. I've got 2 kind of sticky educational questions, if you don't mind. And you addressed both of them, but I'd like it a little deeper because I didn't understand it that much. The business about the FISA and the cap on the rubber tire money, could you explain where that comes from? Was it statutorily required that money go from fast tracks to rubber tires, or what is it?
So we provided that. There's a really good explanation in the unfunded corridor report. So I don't want to, so I think that'd be probably better to read that. But basically the mechanics of it was in the fast tracks plan, it discussed the fact that there would be need to be rubber tire service. And it was a percentage increase of 1% per year. And then I believe it was 2020 when it went up to 1.5%, something in that time frame. Like I said, it's spelled out in the report a little bit better. The board made a decision to cap that rubber tire service and put the difference, the inflation growth, the amount, and grow it by inflation, and then the difference from what it would have been if you'd follow the formula and what it is once it's capped is moved into the FISA. And that's significant. It's somewhere between $10 and $20 million each year as you go out in time. So that is the main funding source for the FISA account.
Can I ask, was that like a statutory requirement in the statute that was passed, or is it a policy requirement?
No, it's in the fast tracks plan, which was approved.
By the public.
Well, the voters approved the voter initiative. They did not approve the Fast Tracks plan. That is a board-approved document. The board also approved the diversion of that money to the FISA. So both of those are board-approved actions.
Okay, so they were both, one could call them policy
Yes.
and not statutory. Okay.
They're not statutorily
Yeah.
required.
Okay, good. Thank you. I just couldn't understand what was happening. Thank you. And the other one is, oh, yes, the Tabor exemption. I believe that it's supposed to stop for the base system at the end of 24 or 25. Is that so?
2024.
Okay. Could you very quickly, if possible, explain what that means? We get a bucket of money from the state for the base sales tax, right? Or how does that work?
So we get, we get sales tax. It just happens to be the state collects it for us. That money has been exempted from the spending limitations since we passed the T-Rex vote. So as part of the T-Rex vote, not only did we get authority from the voters to issue debt, but we also exempted the base system from those spending limitations.
Okay.
So the bonds will be paid off in 2024. As soon as those bonds are paid off, that is a trigger under that voter-approved bonding and Tabor exemption that we no longer have that exemption available to us. So what that means is then we have to do a calculation every year that shows us whether or not we have to do a refund or we're within the limits of being able to keep those sales tax revenues. And that piece of it's just for the base. There is a different exemption for fast tracks for the 2004 vote, and that also expires when we've issued and paid off all of the fast tracks bonds, which won't be till after 2050.
We'll be long gone. Okay. Thank you so much. And you dumbed it down appropriately. I could understand it. Thank you.
Thanks.
Thank you. Director Broom.
Thank you, Chair. Could you give us a little refresher on the Tabor Reserve? I think that's 3% of the total budget. And then how does that compare with the target of having 3 months maintenance and operation funds on hand?
So the Tabor Reserve is a little more complicated than that. It's 3%, but then you get to deduct federal funds and other things like that. So we do the calculation. I'm sorry. Of revenue, yes, 3% of revenue. I'm sorry, yeah, not expenditures, 3% of revenue. But then there's certain things that you can deduct from that revenue, such as federal funds. And so you do that calculation each year, and then we're required to have 3% put in a reserve. That reserve we can't use that towards anything. So we can't apply that towards our 3 months operating reserve because we can't touch it. So, and we have chosen in that reserve, and the board has approved in the past that a portion of that reserve is also funded with property. So it's not all cash at this point in time. A portion of it, approximately half of it, I believe now is property. But there is a portion that's still cash in there. But we don't include that towards our 3 month because we can't access it in a case of an emergency or anything. It would not be available to us.
Okay, then where are we at in having 3 months worth of operational expenses in the reserve? Are we halfway there or?
We're about a month and a half. So about a month and a half. So about halfway there.
Okay, thank you.
Thank you. Director Folska, I'll let you have the last word on this midterm financial plan.
Thank you. Thank you, Chairman Hollick. No, that sounds great. Thank you very much. No question.
Okay, thank you.
Chair?
Yes, General Manager.
If the board's done, I just want to reiterate one point in the plan to date. So we've the finance team has done a great job getting us to a zero balance on the SPP, but or the midterm financial plan, excuse me. But there's an item in here I want to point out because we are still vetting what the impacts will be on this, and that is pushing out the bus fleet in this case, another couple of years. So we're still meeting on that. there could, there's trade-offs when you do these kinds of things, and what it does with the maintenance costs, what it does with reliability, and those kinds of things. And so we've got a robust asset management program, so we know our condition assessments, and that helps us in managing our risk and making decisions, data-driven decisions, because we have data around these things. But I just want to make sure you understand that this is still a bit fluid for us right now. So there could be changes in how it looks when it comes back to you. It'll come back balanced, but there could be some of the trade-offs that we might be talking about until we actually get through our complete vetting, at least on the rolling stock issue. And then there's a couple other items too that we're still working through. So I just want to make sure that's really clear. Thank you.
And we'll bring back the detail. So anything that's changed since last time, we make sure to point that out to you so you know where we made those changes.
Okay, thanks. I'll let you ladies go on now to the...
Okay, so next item up is the long-range financial plan. And this one does not look quite as pretty yet, in that it's not balanced. The fast tracks portion's pretty close, but the base, we're quite a ways off. So I'm going to let Susan walk through kind of the process that we've been going through and where we're at. And we had typically tried to have the midterm and the long range approved at the same time next month in September, but we feel we need a little more time to work on the long range plan. So as the previous schedule showed you, we're looking at adoption of this probably in the October timeframe so that we have a little more time to come back next month and say, hey, these are some of the things we've done, let you digest those before we give you a final version, because it might have some significant changes in it. So with that, I'm going to ask Susan Cohen to please present on the long range plan.
Okay.
You've got to go up and hit the...
Yeah, what am I?
Do you see the little thing behind Director Whitmore? There you go.
Hey, it worked.
You're going too far.
Susan Cohen, I'm presenting the first draft of the long-range financial plan. The long-range financial plan is kind of what it sounds like. It's an overall long-term financial plan for RTD. It includes both the base system and fast tracks. It's essentially an extension of the midterm financial plan. In fact, the first 6 years of the long-range financial plan are the midterm financial plan. It's submitted to Dr. Cog to be included in the regional transportation plan. Essentially, any project, if any project in the region if anyone wants any federal funding for any project in the region, whether it's RTD or anyone else, it has to be incorporated in the regional transportation plan, and they have to have one adopted in order for anyone to receive federal funding. So our time horizon on the financial plan that will be presented tonight is 2040, which is the current time horizon for the regional transportation plan. We also have a model that extends to 2050, which is concurrent with our outstanding debt. Our last outstanding debt on fast tracks is paid off in 2050. Oh.
You got it, but the wrong way.
What?
Hold it up a little hard. There you go. Next one.
There. So what's in the long-range financial plan? First of all, we have the fast tracks corridor construction. After the midterm financial plan, we have commitments after openings through 2040. We have ongoing operations and maintenance on both the base system and fast tracks, including annual operating and maintenance on our service, capital replacement and rehabilitation costs. And we also have ridership forecasts and farebox revenues in there. Revenue sources besides our operating revenues include sales and use tax, federal grants. We also have some local and third-party revenues for fast tracks, at least in the term of the midterm plan. And we also include reserves. Oh, this went a little too fast. So start with what we assume for operating and maintenance cost. We look at projecting out the base system based on the final year forecast from the midterm financial plan. Fast Track's costs assume operations and maintenance of all our completed projects. The Eagle is based on the concession agreement. The concession agreement runs through 2044, which is past the time horizon of adoption of this plan. We have light rail and bus costs projected using RTD's O&M cost model and our forecast service levels. We also have North Metro commuter rail costs, and those are based on the RTD operations, which you'll hear an update later tonight. All our costs are escalated to future year dollars at the Denver Boulder CPI, Consumer Price Index. We also include capital replacement and rehabilitation. Our capital replacement is based on our current asset inventory and on replacement schedules, including both base system and fast tracks. We adjust our current asset inventory for major assets that are produced in the are procured in the midterm plan period to make sure we're not double counting. We also include an annual allowance for major rehabilitation, which would be the kinds of projects you would see for expense projects in the midterm plan. For the base system, because the base system assets are older, we have an allowance based on 0.5% of the installed cost of the existing asset inventory. Fast tracks ranges from basically 0.3% to 0.5% based on the age of the corridor. Once again, all these costs are escalated at CPI. So other side of that is revenues. We use the Leeds School sales and use tax forecasts. The most recent ones are March 2019. We have grants. We take our formula grants forecast based on our historic appropriations. And they're adjusted for inflation, also adjusted for inflation at CPI. We also get fixed guideway grants from FTA, and those are appropriations for corridors that have been in service, fixed guideway corridors that have been in service for 7 years or more. And we assume in the long-range plan, and actually in the later years of the midterm plan, that we're going to see those grants increase based on added mileage of fast tracks corridors, although the grants are based on 7-year mileage, given the lag between reporting 7-year mileage and receipt of the grants, we actually won't get the funding until the 9th year after the corridor opens, because of the reporting lag. And we do not assume any discretionary grants in the long term, because we want to be conservative. While we have historically gotten some in the past, we don't want to be predicating programs on grants that we don't know if we're going to get. Eventually this may go through. So here are our sales and use tax forecasts through 2040, base in the blue, fast tracks in the gold. Ridership and farebox revenues. Eventually this may actually move. The base system ridership and farebox revenues are forecasted with the fare model. The fast tracks ridership is forecast using regional travel model in cooperation with DRCOG. And the farebox revenues are forecasted using the ridership forecasts and our current data on average fare paid. And once again, as with the midterm plan, we have assumed fare increases per the current board policy, which is in the long range plan is actually tied to the CPI. So fare rates are moving in pretty much in lockstep with costs. here we're going to go through some of the major changes that we've seen since 2018. Sales and use tax forecasts have dropped quite a bit from the forecast used for the 2018 long-range plan. When we presented the unfinished corridors materials in June and July, we highlighted that. We saw about cumulative total of almost $1.5 billion decrease between the March 2018 and the March 2019 forecasts. Farebox revenue forecasts are basically identical, other than the adjustment that Jeanette mentioned for the midterm plan. We saw a decrease in operating and maintenance costs because we incorporated budget reductions from the 2019 amended budget, and the long-term CPI forecasts from Moody's were slightly lower this year than last year. That's offset by increased capital replacement costs. We're also looking at issuing COPs to fund vehicle replacements. So this there, you can see the blue line. This is the sales and use tax forecast comparison by year over, and the blue is last year. The orange is what we're forecasting this year, and you can see there's a decrease, and the gap gets wider as time goes on. O&M cost is the blue is last year, the orange is this year. They're pretty much in lockstep, but the orange is slightly lower. Eventually, this might actually move. Nope. Oh, I'm sorry. Sorry, I'm having trouble with this.
We'll just go through.
Okay.
There you go.
I think I skipped one. There's also a chart of base of the what? Okay, that came out. Okay, Fast Track's internal savings account. If I can focus back on that. As in the midterm, we talked about the continued growth of FISA based on the savings from the rubber tire service increase. However, we would need in the early years of the long range plan to continue borrowing from the FISA to fund operations and maintenance on Fast Tracks. We would be borrowing funds from 2026 through 2030. We would be able to restore the full balance by 2035, and through 2040, the FISA would be fully funded and would be at about balance of about $563 million at year-end 2040. So, eventually, we get to the long-range plan, the base system cash flow, and see if you go down to the bottom line of year-end balance, it's negative. In the year 2040, we still have a gap that we have not been able to solve for, and we still need to be working through that. Fast Tracks, on the other hand, maintains a positive unrestricted fund balance and a positive FISA balance in every year through the term of the long-term plan. By 2040, as I mentioned before, we would have a balance of $563 million in the FISA. That would be augmented by an unrestricted fund balance of about $215 million under our current forecast. Okay. Our net revenue coverage is 120 or greater starting in 2022. As Jeanette mentioned in the midterm plan, we have the certificates of participation that were assumed for the buses in the midterm plan are sized where they are, and we could not issue more because if you look here, we have we have net revenue coverage of exactly 120 from 2023 to 2025. Here is another chart of our the cash flow. The black line would be our revenues, and as you can see on this, most of our basically all of our revenues above what are required, what we have to maintain for debt service coverage, is spent on capital in this plan. Our opportunities, if I can get there. Eventually, I'll figure out how to use this. Our opportunities are, we have potential long-term funding available for some additional projects further out. Our biggest challenge right now is that the base system is not balanced. Our unrestricted fund balances are negative starting in 2027. We would need to make adjustments. We can't even issue certificates of participation to cover deficits because our year-end balance 2040 is negative. We have nothing to borrow against. We're looking at how we can construct and operate our unfunded fast tracks corridors, while maintaining our assets in the state of good repair. Mentioned sales and use tax volatility. Jeanette mentioned earlier that our sales tax this year is coming in below forecast. And if you look at what we were forecasting at this time last year versus this time this year, there's a significant difference. So sales tax forecasts go up and down by year, and we're not sure where we end up. Once again, here on the long range, we also have the funding constraints and financing challenges with the Tabor exemption, which expire for the base system expiring at the end of 2024. Until we get a lot closer to 2024, we won't know what impact that would have on our revenues. We've seen debt service coverage. We also, if you remember, the base system isn't balanced, and we still have some long-term service needs outside of the fast tracks corridors. So our next steps will be to come back here next month with a second draft of the long-range financial plan, and we are hoping we will have it balanced on both the base and fast tracks by then. On October 22nd, we will present a final and hope to have something that will be adoptable on October 29th. And at this point, questions?
Director Williams?
Thank you, Chair Mihalik. Susan, your hair looks good longer.
Thanks.
Yeah. Okay, I have what I think are some related questions, and I'll give you some. The first one is real simple. Can you give me some examples of what third-party revenues are?
As part of the fast tracks plan, the local governments and private entities in each corridor were required to provide 2.5% of the cost of the corridor. We've also had arrangements with outside entities that wanted improvements to be built as either part of our project or in conjunction with our project while our contractor was in there, and have reimbursed us for the difference between what we would have built without their contribution and with their contribution.
Cool. Okay, that makes sense. Okay, then on page 35, there's a line about a decrease in operations and maintenance costs. Mm-hmm. On page 38, there's a line about savings from rubber tire service increase. And I'm just wondering how all of those are reflected in our ability to maintain a state of good repair, which we have done a great job of historically and are working all the time toward maintaining. So I just wondered if you could speak a little bit to those two lines.
Sure. So there are kind of two different things. So the rubber tire service that we discussed is the amount that's frozen, and the difference goes into the FISA. So that really affects service, right? So if that money wasn't going into the FISA, that money could be used to offset service in the base system and funding there. So that's more of a service-related item, which then in turn comes to costs and those type of things. The operating and maintaining, a lot of that is operations, but some of it is maintaining our state of good repair projects. So we have done an analysis in this in determining what that would look like, and Susan ran through kind of the formula that we're using to determine how much we should set aside for those type of activities. Next year, we will be moving to a new methodology, which will be using our asset management plan to help us further refine those numbers and be more specific, and we'll be applying those in there. So those numbers might change a little bit because right now we're using a formula to do it versus looking at every individual asset and determining, okay, this is its useful life, but these are other things that go into it. Right now, from our perspective, we're looking at just the useful life of that particular asset and when it is up, and then assuming we're going to replace it. And then we use that formula for the expense type projects. So.
Okay, I think that helps a little bit. Thank you.
Okay, thank you. Director Broom.
Thank you, Chair. You have a graph that shows debt service coverage, and in 2025 it shows 120 coverage, and in 2034 it shows 2.25 coverage. Is that just a function of debt being paid down?
Yes, it is. Yes, it is. We at the end of 2024, as we mentioned, we would have paid off all the T-Rex debt. We also have certificates of participation for existing fleet that will be paid off over time as well.
Okay, thank you. Director Lubow.
Thank you, Chair Mihalik. Susan, thank you so much for that presentation. It was very thorough. I have a few questions. For those of us who want to see the fast tracks corridors finished, this is not a source of great celebration, this long-term plan.
Can I say something to that? It doesn't differ much on the fast tracks, right, from what we presented in the unfunded corridor report that we gave you. So I wouldn't say that it's much different on the fast tracks, right? And we had pointed out in the unfunded corridor report that we had a significant shortfall that we had not addressed in the base system. So it's pretty consistent with that report.
It's not new, but it's still not a cause for celebration.
Yes, that's a good way of saying it.
Yes, okay. Unfortunately. So I just have some questions. You mentioned that the FISA funds are going to be drawn down between 2026 and 30. Where could you say how much money that is? I'm sure it's somewhere in there.
We'd have to get back to you.
Okay. All right, that'll be fine.
Drawdown number.
Okay. And then also, I think it's page 16. You had it up there, the debt ratio, or you called it something else, revenue.
Net revenue coverage?
Yeah. But
But
isn't that also the 1.20, which is what we would need? That's the minimum to issue bonds in order.
Correct.
So it looks like as we're moving along, that goes up, and so that makes us more attractive. But there's just no money to bond, right?
Correct. We would have the debt service coverage, but because of the required capital expenditures, we wouldn't have any money to actually repay the debt.
Right. Okay. So the one hand it worked nicely, the other hand it's taken away. So. But that raises the last point for me, which is that I would like to see in the cash flow chart, it's indicated there's all this pink that indicates capital expenses. And is there some way for us to get notes that would just show, okay, in this year, this is what is going to be expended? Because it's all the money that it was the white that showed all the revenue that we had, and now it's nothing but pink and capital expenditures.
We have that information. It's going to be quite large amount of data, but yes, we have it available.
Well, I'm just wondering if it could be summarized, because I think...
Yes, we could summarize it.
Thank you, because I think it would be important for the board to be able to tell our constituents, well, we're not building fast tracks because in such and such a year we have this capital project and that capital project.
Yes,
and if it could be indicated, those that are base, those projects that are base and those that are fast tracks. Thank you very much. I know it's extra work. Thank you.
Thank you, Director Lubau. Director Cook.
Hi there. Continuing on the FISA, it's in the next agenda item, or maybe two down, the current monthly financial status. They do have the FISA account budget. So I thought it might answer some of that if we can clarify on the packet page that shows the uses, packet page 38, you talk about the additional use of the FISA for fast tracks operations. And then on packet page 62, where it shows that, it mainly seems to be for the current year US 36 project draws. Is that true, 2019? And then for the 2025 to 2030 period, it looks like it's US 36 project plus debt service and operations funding. Am I reading that right? Is that the drawdown you're talking about there?
Yes. The current is actually from probably about 2015 commitment to provide pieces of US 36 which were originally to be deferred till after opening, and we have not. We're still working on completing those.
Okay. And then this looks like it took place previously, but it shows a reduction in the Fast Tracks operating and maintenance fund balance from 3 to 2 months.
Right.
And that resulted, or maybe that was in a different fund or something.
That actually was part of the FISA from 2013 through 2016, when we basically only had the West Corridor operating. In 2017, we presented and the board approved removing that and returning to a 3-month balance, given in reserves, given that we had at that point opened the Flatiron Flyer and most of the Eagle, and we're projecting to open R line and G line.
Okay. And is the debt service and operations funding mentioned in 2025 to 2030? Which debt service is that and operations funding?
That would be the operations funding for fast tracks. The numbers in the monthly financial status report are based on the long range plan that the board adopted in October 2018.
Okay.
At this point, once the board adopts the long range financial plan 2019, that report would be updated to reflect whatever drawdowns and repayment are projected in this plan.
Got it.
But for right now, they're what's adopted.
Okay. And then just to drive that point home about how this account is funded, if the funding increases for bus and paratransit are limited to CPI, and CPI has been very low for the past several years, correct? We really haven't been able to expand bus and paratransit much at all. And to the extent that we are then diverting money into this account, it really is at the expense of service for areas that have increased in population and or workforce, et cetera, correct? I mean, that
would be a true statement. Yeah.
So that's a really tough choice. I don't know if there's some calibration we need to do, but thank you.
Okay, thanks. Director Geisinger.
Thank you, and thank you, Susan, on this. Just a quick question. You said that you don't include any discretionary grant funding, which makes total sense to me, but I'm wondering if you can give us a sense I see grant numbers in the mid-range plan, but for discretionary grant funding, about how much is that sort of ongoing now, or is it a number you can?
It's really project related. So you would have to submit a project that met the criteria for whatever grant was out there. In the past, we've received full funding grant agreements for starting with our Southwest Corridor, Southwest, T-Rex, West, and Eagle. We also got a small starts construction grant for Southeast Rail Extension. We've gotten smaller discretionary grants for bus purchases, electric vehicles.
Yeah, and one of the reasons we don't put it out there is currently, we just don't know if that money will be available. Those programs change considerably, and currently, the projects we've identified, the unfunded corridors on fast tracks, as well as the State Highway 119 projects that's in the base system, our analysis is they wouldn't qualify for those type of discretionary funds. So they might qualify for something like a CMAQ, a grant or something like that, but that's through an application process that we do through Dr. Cog, which is very uncertain. So,
good. Thanks so much.
Thank you, Director Minton.
Yes, for the future, could we possibly change, and I'm giving example of packet page 38 or the documents page of 13, with the line item, which you've all heard already, so you don't really need to go there. Savings from rubber tire service increases. Could you, this will be the, I think, fifth, sixth question this year in the few presentations. Could we just clear that up to make it more clear? Because the average citizen out there is thinking that means somehow they had savings from increasing bus service. Mm-hmm. Could we make it more clear, please?
We can try to figure out a different name.
Thank you. A slower growth of the promised, or we didn't fulfill all the promise, we took it and shifted it, however you would like to word it. Thank you.
Really made it clear.
Thank you. Director Folska, any questions or comments on the long-range plan update?
Yes, thank you, Chairman Mahalik. This is slightly off, and I'll just ask it. I don't know if this is the appropriate time for it or not, but I started thinking, listening to the presentation, that it really is important for us to look at other revenue streams, and we've talked about that ad nauseum. And I'm wondering, for example, I mean, we have a lot of different types of property that we own, some that we own like Union Station, some that we've acquired through eminent domain or a nice way of agreeing to buy the property from someone. And so there could be some fine legal, depending on exactly how the property was acquired. But so let's just take 29th and Welton, for example. If we were to do a ground lease, would that be possible to generate revenue from that? And I know there are other places that we have property that we could lease to someone for 50 years, 99 years or something. And have you thought about that?
Yes, we do think about that and work on that quite a bit. It's really probably a matter more of those kinds of development deals coming to us. So 29th and Welton, I think we gave an update just last week on where we are with that project. So in fact, I had a call today, and I haven't been able to return it yet, from Denver Office of Economic Development on that project. So that's still an active project for us in terms of one of our pilot programs under TOD. So that's an example of a property where, if the right package or the right deal came together, that could be a ground lease. And there's probably a few other parcels that would qualify, but we've really not been able to put any particular packages together just yet that have penciled out.
And I'm wondering, so I guess my question probably would be better asked as, are there properties that RTD owns that we would not be able, for legal reasons, to make money off of it?
If I understand the question, are there properties that we own that we'd not be able to do that?
Yeah, like if you if, for example, if you just right now went across the street and did eminent domain and took all the buildings on the other side of the street, and then, but it was only for transit, and you decided you didn't need it, and then you wanted to build new buildings on it and make a bunch of money, is that legal?
Not really necessarily. We can only acquire property for transit uses. So if we had surplus property, say we acquired a piece of property and we didn't need to use it all for the transit use, and the owner didn't want to retain the non-transit use part, then those are possibilities. We have a few parcels that are probably large enough that could be looked at for different activities, but I have to say that that's largely driven by local land use by the counties and municipalities on what they want to do in their areas. So it's, all of these kinds of things are rather complicated, and we're not necessarily in direct control of them.
Right. That's what I wanted to know. Thank you so much. I appreciate it. That's all, Chair Mahalik. Thank you.
Thank you, Director Folska. I have just one question. If it's been mentioned before, forgive me and remind me. On packet page 37, those drops in O&M, and it's also on 42, I believe. You can see it in the graphs. Those drops in O&M costs, is that just following like a substantial vehicle replacement period?
No, they're actually more related to change in the CPI forecast. And we also had some decreases in this year's budget, which would manifest over time. And you see, the difference is pretty steady.
Okay. They just had these regular spikes and drops, and so I just wasn't sure what that.
We do have certain costs that are cyclical. The biggest one being the Eagle concession agreement, which has periodic renewals in it.
Okay. Well, I think that's all the questions on this one, and we will move on to the quarterly investment report.
So I'll just do a quick recap. We are still trending pretty close to what our benchmarks are. And for the year, earnings are about 2.3%, which are slightly higher than before, although we would expect with the interest rate changes that perhaps our earnings might not be as nice as 2.3, even though it's hard to be excited about 2.3, but it's better than 1, which is where we've been in the past. So with that, Brendan Morgan, our head of debt and investments, is here with me, and we'd be glad to answer any questions you may have.
I don't see any questions or comments for this quarter.
Poor Brendan got off easy.
Good presentation.
Excellent.
The report was so thorough that there were no questions. That's how I'm going to interpret that.
If I can,
Sure.
I'll just highlight the fact that we've earned over $10 million just through June of this year. So it's been a very good year, well ahead of budget, as Heather mentioned. So far, so good.
Thank you for pointing that out. $10 million. Okay, we will move right along to yes, Director Folska, any questions or comments on the investment report?
No, thank you, Chair Mahalik.
Okay, so it's unanimous. We will move on to the June 2019 monthly financial status update.
This is Heather again. I'm going to turn over to Doug McLeod to walk you through the monthly financial status.
Thank you, Heather. Good evening. This is Doug McLeod. So these are the June financials. So we're halfway through our fiscal year. Pretty much everything compared to budget, as you can see on the left side, is our actuals are under budget, indicated by the red. But on the right-hand side, we're all green for the most part, except for ridership. Sales and use taxes through June have performed fairly well. You may recall that we were given a budget, or we forecasted and budgeted for this year a 4.4% increase based on the CU Lead School of Business forecast, and we're coming in at a 3% increase over the prior year. that means we're falling, it shows 1.7% short year to date, so the sum of those two is 4.7. Some of that budget is front-loaded towards the end of the year, so we should maybe make up some of that ground going into the end of the year, but if the trend continues, we'll still be short of our budget. Looking at the details of sales and use taxes, there's nothing really that stands out that's short. It's to budget, it's really just across the board. Our top 5 industries are full-service restaurants, new car dealers, hotels, limited-service restaurants, and warehouse clubs. I wanted to point that out because 2 of the top 5 producers of our sales taxes are restaurants. There's been articles lately talking about how people are spending more at restaurants than they spend on groceries. But I do point that out because some of those items are fairly sensitive to economic conditions, hotels included. So those are significant contributors to our sales and use tax revenues. I'm going to speak just briefly to start about our ridership situation and then come back to it. Just want to mention a few things in detail.
Just scroll down.
Yeah. To the second page that talks about ridership. Yeah, perfect. One of the things I wanted to point out, and like I said, I'll talk a little bit more about these numbers because we had a pretty lengthy discussion last month with the main numbers. But in the graph down at the bottom, what you can see is the blue line is our actual ridership trend, green line is prior year, and red line is budget. So in the last 3 months, April, May, June, you can see we're right at budget, right at prior year, same trend. But those first several months, we were below. Part of that is due to the fact that we had forecasted an increase in our budget from the opening at the beginning of the year of certain lines, but we're also below last year significantly for those first few months. So I'll talk about that just a little bit, but I wanted to point out that graphic before we got to the table of numbers. And then if you could scroll down to the next page, which is our fare revenue. So fare revenue, you can see at the top there we're falling short of budget by 4.9% or 3.8 million, but we're over last year by 5.4% and 3.8 million. Most of that increase is due to the fare increase, but with ridership being down, that's driving us a little bit below budget. Same kind of scenario as last year. If you could scroll down just a little bit to that same graphic for fare revenue. So on this line chart, what you can see is it's the blue line again is actuals, and if you follow that left to right, you get to May, it's pretty close to our budget, then it drops off. That's the same trend that we see in the prior year from May to June, where the green line drops down a little bit, although this is a little bit more severe, and we had budgeted on the red line for that to actually increase with additional service being added on. So we've got some things being driven by, or most of that is being driven by some of our ridership trends. So now moving on to, if you could scroll down, I think it's 2 or 3 pages further where it shows ridership by mode. So this is packet page 61. I think it's the next page. Yeah, there we go. So you'll recall last month that we had a pretty lengthy discussion about some of the data anomalies we were seeing, especially with light rail. And we also said that we had done a lot of checking of those numbers and to that point ruled out a lot of issues. And we said we would continue to kind of dig through the data to see if there were any other things that we could find. Well, we did find a couple of other things. So these numbers have been restated, and we're more confident in these numbers where we stand now through June than what we had presented previously. But we still see some of the same trends that we were seeing. One thing that flipped is if you look at the total bus service, last time we talked about that, it showed a positive year-to-date increase over 2018. What we discovered is Flatiron Flyer within the software was being double counted, both as fixed route and Flatiron Flyer. So rather than being slightly positive on bus, you can see we're down 3.8% on bus ridership. Wow. Yes, packet page 61. All the way over to the right, it shows a negative 3.8% ridership. Then you'll recall on light rail, we had a double-digit percentage decrease, or we were showing that with those preliminary numbers that we spoke about through May. We went back, we found what the issue was there, and as you can imagine, there's a whole lot of detail that comes through because we get ridership from every trip throughout the month, literally millions of data points in there. So our great staff in the service planning department found another anomaly to do with light rail. What was happening is as these new light rail vehicles were being put in service that have been starting to be put in service as of March, the software was picking those up as if they were buses. So rather than extrapolating from the APCs on those new light rail vehicles across the entire consist, it was looking at it as if it was one single vehicle, if that makes sense. So those numbers weren't being factored up for the length of the entire train consist. So it was depressing the numbers from March forward. Once that issue was resolved, you can see that now for light rail, we're down 6.8%. So still we're down, particularly in the C and D line, you can see those ones are still double digits, but not as bad as they were reflected before. So anyway, we wanted to just point out those issues. We feel pretty comfortable with the numbers at this point through June, and we expect, as you saw in that graphic, that if the trend continues, we'll be closer to budget going forward. We did see a bit of an uptick in the last 3 months from April through June. That concludes my comments on the financial statements. One other thing I wanted to follow up on too is we did have a few requests from the board members asking about when the 2018 service performance data would be ready. That's the family of services that shows the breakdown by route and by mode of service between revenues by route, expenses, and then the subsidy. So we're very close. It took a little bit longer to sort all that data out, and it will be presented at next month's, at the September Operations Committee. With that, we'd be happy to take any questions.
Okay, thank you. Director Broom.
Thank you, Chair. Could you speak a little bit about the two different components of sales tax, one being sales tax, the other being use tax? Is the use tax on autos and building materials where we projected them to be, or are they behind?
I don't have that breakdown. I don't have the forecast with me the way that CU Leads had broken it down. But generally, what we tend to see is use taxes make up about 10% or so of our total sales in use taxes. So it's not a huge number, but it's significant enough that it's big dollars. So when we see those variances, they aren't super significant on the use tax piece since it only makes up 10%. And when we see these 3% variances to budget overall, it's mostly on the sales tax side.
Okay, and then the other question, typically there's a rule of thumb, which of course gets you into trouble, but when you raise fares, it's the old supply and demand thing. Prices go up, your demand goes down. And you say normally you see about a 5% drop in ridership because of the fare increase, but that over time, maybe the latter part of the year, that ridership will come back. Is that what we're seeing, or what is it just a matter of we've had so much trouble with our counting methods that's why it's so hard to get a handle on what's going on with ridership?
So, sorry. So our ridership forecast as well as our fare revenue forecast took into consideration in our model that there's typically a dip and then they come back again. So the numbers that you see assume some of that dipping and come back. But as you can see in the chart that is in your packet, we tend to see it going down about now and then starting to come back up again with or without the fare increase about this time of year. So we're seeing that in June. The numbers are back up. Starting to go back up again. But the overall trend for, in particular, light rail is down from ridership much more than what we would normally expect, whether there was a fare increase or not. So we continue to investigate what's going on there. With the recent numbers that we were showing you, we're able to pinpoint maybe where we should be looking at a little bit more, those specific lines, the C, D, and L. Yeah, we expected that, but we expected the ridership to not be as low as it is and maybe rebound a little faster than what we're seeing.
Thank you.
Okay, thank you. Director Metten.
So I want to make sure I just go over where we had these anomalies. So with the Flatiron Flyer, it was essentially being counted twice. Once it was in the line item as Flatiron Flyer, but then also doubled up in fixed route line.
Correct.
Correct? And then with the light rail, let's say we had an example of 2 or 3 cars on that set. Is that what we call it, a set? Constant? Okay. Never knew that 6 years later. All right. And you have a passenger stepping into the third car. It was just, and somebody stepping in on the second didn't matter. That set, that constant, said, we're only counting one.
Yes.
One of those counters, and somehow the computer, the algorithm, the setup formula said, I don't care that I read somebody coming in the second car. I'm only counting the third car.
Correct, because as you recall, there's only about 30% of our light rail vehicles have APC counters on it. So if we have a 3-consist train with only one APC vehicle, the software knows how that vehicle was assigned and how many vehicles had APCs versus not. So the software knows how to extrapolate the data it collects from that one train car to all 3.
All right. And then, thank you. My next question would have been, when are we going to get the family performance report? So you've answered that. That's September. Is that like guaranteed?
Yes. And I apologize for it being late. It takes a little coordination between several departments coming up with the information. We typically have it a little bit earlier. So yes, in fact, I just talk to all the parties that are involved in this, and we will for sure have it at the Operations Committee next month.
All right. And then based upon these anomalies, how much faith should we have in the 2018 report?
So each of these issues with the ridership happened in 2019. The new light rail vehicles came on in 2019. The bus issue was something that happened across years with the software. Was something that we had to indicate within the software that we wanted the Flatiron Flyer broken out separately, because within the software, our Flatiron Flyer, or what we call BRT, is not considered true bus rapid transit by FTA. So when we do our filings with National Transit Database, we include Flatiron Flyer with our regular fixed route bus. So we have to take these extra steps, and so that was one of those anomalies that happened also with the change in the year. So 2018 we feel very confident with, and it ties out to what we had the auditors had looked at and what we also filed with the National Transit Database.
Okay. And the reason it's really important to me is that in our second committee tonight is operations, and they're coming to us with the 2020 service changes, and having that data, having those numbers, having the breakdown. I hope it's going back to the old style where it has the subsidy, the cost per route, the revenue per route. Does it have all those?
Yes.
Like we used to have?
Same format.
Same format. All right,
yes.
Wonderful. Because that helps me to know better when ops and customer service says something, going to look at that. So thank you. That's all my questions.
Thank you. And Doug, could I ask that you help explain that APC randomization rationale? I found it helpful when you explained it a week or so ago, just for the benefit of others, how that ABC or the APC rationale, like the randomization of it.
In terms of extrapolating the data.
Yeah, there's only one per
Oh.
Multiple cars. Yep.
Great. Yes, and thanks for pointing that out. So, as I was saying, with the light rail vehicles, there's only about 30% coverage with the automatic passenger counters. We're working our way to be up to 70% in the next 18 or so months. That's going to be through a combination of getting new vehicles already equipped with APCs and the board-approved funding for retrofitting some of the existing rail cars with APCs. So that'll give us a lot more confidence in the numbers for APCs out there and relying less on the extrapolation factor. One of the other issues with rail vehicles versus a bus is with a bus, you typically only have one entrance point, one door with APCs on it. On a one light rail car, you have 8 doors. So it requires 8 APCs. If there's an issue with any one of those APCs, some of the data can be thrown out. We'll see data that comes through that doesn't make sense, may have way more riders than for a trip than the actual car will hold. So there's a lot of data cleansing that has to go on and a lot of validation that goes on too. We actually have ride checkers that get on to the trains and they validate our APCs. So when the board authorized to get certified with our APCs to shift to that method of ridership counting, get certified with, use that methodology, we had to submit a plan as to how we were going to make sure that we were 95% confident that the numbers we were reporting were within a 5% error rate. That's what we committed to. With FTA, we also have a maintenance plan associated with that we have to follow. So if we have APCs reporting incorrectly, we basically decertify those APCs until they are looked at by our technical team in IT. So there's a whole lot of things that go on in the background, but it's even more complicated with rail just due to the sheer number of doors and the shortage that we have in APC coverage right now.
Thank you for that. And I'll just add that I found it interesting that because there may be a bias for people to ride on the first car, that they randomize that and have a function so it's not always the first car, and so there's a function to account for that.
Yes.
Did I get that right? Okay.
You're an expert now.
Director Lewis, you are next.
Thank you, Chair. Hey, Doug, the last time you were here, we talked about the ADA modifications and that could be potentially impacting the ridership on the L line. Were you able to find any correlation or connections?
No, I don't know that we've gotten any data back on that yet.
Yeah.
Maybe Dave knows. I don't think we have any information on that yet.
This was one of the items or variables that we thought could be impacting ridership because with fewer seats, I mean, we have had complaints about fewer seats in the vehicles because of that modification, and it is in every light rail vehicle we modified at both ends because we wanted to have the flexibility to be able to put them anywhere in the train consist. So we simply listed that as a possible factor, and so there's really no way to quantify that.
Sure. The second question I have, I know that at some point the D line or the L line was previously the D line, and have you seen any correlation between ridership and the reduction of that line in terms of cars? Just by chance?
Well, as we continue to look and analyze ridership, we're laying over like all the service changes over time so that we can see if we're seeing any ridership changes that happened when we did a change in service, whether that was when we changed the D to the D and the L, and then of course having a one car consist predominantly on the L. Another impact that could be is if a person was taking the D line, but they were going the previous D line, and they were going further than the downtown loop, they have to transfer. So that could be an impact as well.
Thank you.
Thank you, Director Catlin.
Thank you. I had a question with regard to, you have 30% roughly of the APC on vehicles. Is that spread uniformly across the district, or are there some lines that have a larger percentage of APC than others? And would that have any kind of make any kind of a difference in your numbers?
Yes, it definitely makes a difference, and that's one of the things that we've struggled with because, as you can imagine, it's very difficult to place those APCs exactly where you need them. So our service planning folks work very closely with our operations people by reporting. Our main standard is that we want to get at least an APC count of every trip during the month. So every individual trip, every route at each time of the month, we want to get at least one count to give some credibility to our methodology. So as we go through the month, we continue to report to our operations folks, hey, we need to get an APC train out on this particular trip. So they follow that pretty closely and at least try to get those out there. What we've done recently is, as we've gotten a few more APC-equipped vehicles, is we've tried to put them on an entire consist. Rather than having just one APC vehicle, we've asked operations, hey, can you put 3 together to get this trip, just so we can validate that what we only have one APC vehicle can be validated by putting APCs on all vehicles. It's kind of
So kind of a calibration issue?
Yes.
Okay.
Yes. So.
And then my second question, I don't have the visual in front of me of the zones, the fare zones, and the number of stations that are regional trips as opposed to local trips. Those are different based on the line. And would that have any bearing on the ridership on some of these underperforming lines?
Possibly.
Due to the fare increase, yeah.
One of the things that we looked at back when we had the initial data that showed such sharp decreases in ridership was we looked at average trip length to compare year over year to see if that was having something to do with it, because we were concerned that maybe some of these new services like Uber and the scooters may have been taking away some of the shorter trips. But at least on a system-wide basis, our average trip length did not change. So, without going down to each section, yeah, it would indicate that we're not seeing it's much across the board, both regional and local trips that we're experiencing that.
It was just a hunch. The third thing is just sort of a little joke. For your August numbers on the Flatiron Flyer, you might want to take a look at that. I actually saw a Flatiron Flyer bus on Ken Carroll Avenue and the interchange of C470 yesterday. That trip probably wouldn't count for the Flatiron Flyers. Anyway.
Yeah, luckily we don't go by the bus, we go by the route. That was probably a really comfortable trip, though, for somebody.
Okay, thank you. Director Williams.
I don't know if this goes to you or goes to Dave. Does the APC count a service dog or a stroller or a bicycle? Or does it specifically only count people?
It should. They're actually a little more sophisticated than just, like a door dinger that you pass through when you go through into a business. They actually know which direction you're taking. I believe they work off a heat signal. So I think they know if you're, a person or an inanimate object. I'm not sure about the dog question. I would think maybe. But it also counts our drivers too. So if our drivers or our operators are getting on and off to take breaks, it also picks them up. So there's a lot of, it's not an exact science, I would say.
So in the cars we're getting that come equipped already, are they going to be more technologically sophisticated to be able to know some of those things?
I probably shouldn't be answering these
And
questions.
Dave looks like he wants to get out of his chair over there.
Dave.
The other Dave.
Dave Johnson.
Sorry.
No, it's okay. Good evening. This is Dave Jensen, AGM of Rail Operations, and I was wanting to get out of my seat the whole time. Just one thing I think it might help add perspective as well as Doug was talking about getting an APC on every single trip. We're running about 1,000 train trips a day, so that's an awful lot. In terms of your question, the newer vehicles, the sophistication for the APCs is better. Should not pick up a dog as a human, but we can't always guarantee those things.
Super. That's what I wanted to know. Heather, yeah?
And I would just say, that's why we do have the ride checkers too, because that's part of our agreement with FTA that we will validate some of those with human beings doing their counts too. So that way we can tell.
We get the Citizens Advisory Council to go do ride check for us at the time too. Never mind.
Thank you, Director Williams. Director Folska, any questions or comments on the monthly status update?
No, thank you, Chair Mahalik.
Okay, thank you. Thank you, Doug. We will move on to the smart card and mobile ticketing update.
So Tanya Anderson's on her way up, but I think we put it in your packet. Just a couple things, and I'll have her talk about mobile ticketing because it's pretty exciting where we're going with that. Not that smart card isn't exciting, but it's not as exciting because we're actually winding down our smart card. That's why you see more and more greens and yellows versus reds. We're trying to close out that project, and we've now already ramped up our new account-based ticketing project that we're moving to in the future. So we'll probably just report data on use of smart card and not the project status, as the project will no longer be in existence. And we'll focus more on starting to report on our account-based ticketing progress and continue to report on mobile ticketing. So with that, I'd like Tanya just to do a quick update on mobile ticketing, where we're at, and kind of where we're going over the next few months.
Good evening. This is Tanya Anderson. I'm the manager of electronic fare operations. As Heather mentioned, the smart card system, we are closing down the base contract. There's been no significant changes to our EcoPass, College Pass, Nico, or MyRide sales or utilization. It's pretty stable since the last update. And in an effort to redirect resources to the new account-based fare collection system, we have canceled many of the projects on our smart card product backlog. And we're only completing those projects that are absolutely necessary for operations as well as for compliance purposes. In addition to closing out the contract, Conduent and RTD, we've reached an agreement to conclude the platform validator screen testing this summer. As a reminder, that those are the platform validator screens that are going dark because of the excessive heat and direct sunlight. Unfortunately, the Conduent recommended platform validator screen solution has failed. That is the primarily reason why we have essentially canceled the testing. 14 of the 17 screens exhibited the darkening issue, and it was both Conduent and RTD's expectation that all of the screens would eventually fail during the testing period. Conduent has agreed and will continue to replace all of the failed screens at no additional cost for the remaining life of the smart card system. And then moving on to mobile ticketing, sales continue to exceed expectations. As of June 2019, 12.4% of fare revenue is from our mobile ticketing app. In April, RTD conducted a mobile ticketing customer satisfaction survey, and overall users rate the app favorably. They're still very happy and essentially love the app. 91% of our users reported that they would likely recommend the app to someone else, and that's really impressive. That's a great network effect. Although overall rating remained high for the app, we did notice that users have rated the app's ease of use slightly lower in 2019. There are some friction and issues with using the app that our customers have reported to us last year. Those were not fixed this year. This is pretty much what happens in mobile apps. If you don't address customers' issues and concerns fairly quickly, that usability and the favorable rating will drop. In response to that, we have provided that feedback to Masabi in hopes that they will provide, will include some of those fixes in their product backlog so that we can increase that rating for ease of use. Continuing in the spirit of excellence, in May, RTD became the first transit agency in the world to sell mobile tickets in the Uber app. This collaboration was made possible by our amazing mobile ticketing vendor, Masabi, and they are more than just a mobile ticketing vendor to us. They are truly a strategic partner. As of July, RTD mobile ticketing sales in the Uber app have been over 3,500 tickets. And, you know, we took the world by surprise by collaborating with an unlikely partner. And I think about, you know, those National Geographic and those memes where they have like unlikely animal friendships. I'm sorry, that just That's the picture that comes to mind. But when we have shared goals and we focus on providing great products for our customers, those unlikely collaborations can be successful. And so I just hope that Uber is wildly successful in their Uber Transit platform and have other transit agencies adopt ticketing for their cities, because when they are successful, we will be successful as well.
And I just want to emphasize that 3,500 tickets are about what it is those are 3,500 times that somebody went into an Uber app to hail an Uber and instead bought an RTD ticket. So, I mean, we're still amazed by that number, and the fact that has given us a whole new outlet into a different customer base potentially than we had before.
And then there are, just finally, real quickly, there's a couple other projects that are in the works. We are also working with the Transit app, to begin selling our tickets in their app as well as a project which will start hopefully this year and continue into next year to digitize cash, meaning someone with cash at an RTD sales outlet, potentially at another retail outlet, would be able to purchase a mobile ticket using cash, so that we can support our low-income customers with the Live program that we just launched successfully, and the unbanked and the underbanked. And that's all I have. I'm ready to take questions.
Okay. Thank you. Director Menton.
Thank you. So I think only those of us elected in 2012 would remember the long struggle we had with the smart card. There's some people who don't have a clue here. But what was our total investment in smart card? 35, 38 million, 40 million?
No,
more?
It wasn't that much, so I have to get the exact number for you.
Okay.
I want to say it was 24?
About 25.
25 million total.
25 million.
Yeah.
So I have to admit, I have been hearing what you've been saying with this transition now to the account base, but we're going to just get rid of the smart card, correct?
Yes, that's correct.
Yeah.
No part of it will exist.
Okay.
When we transition.
With that vendor. Now, there might be a smart card product or a card product that you can use, but it will not be with the conduit vendor.
It's the back office, right, and the processing that will look different.
Yes.
So there still may be smart cards out there.
I'm just wondering, I'm trying to figure out how many years we got out of let's say it's a $25 million investment.
So I can give you that number, but I think it was 2008 or 9 when we first began that.
Right, my
project.
ride, 2008, 2009, but we did launch EcoPass, our pass programs in 2013.
Yep.
Okay. If you happen to have those numbers around, that would be
We'll get them.
Good for me. And that's all the questions I have about that. Thanks.
Okay, thank you. Director Cook.
Hi there. On the Uber app, have you approached them, or can you approach them to see if they can, in addition to doing, either or, taking Uber or transit, combine them? Because, do they? So they say Uber plus transit. We'll get you to okay, excellent. How is that?
They actually brought that up, and we did have some very early discussions. It's unfortunately not part of the initial scope of the launch for Masabi, and there are a lot of challenges. And so right now we're focusing on this cash digitization and not on this multimodal payment integration, which is the buzzword when you take two payment methods and combine them. But it has come up in conversations, and it's something that Uber is very interested in doing with us.
Yeah, but they're not.
But you
doing it
currently
currently.
can buy an Uber and so it'll tell you that you can buy an Uber and an RTD ticket. But when the transaction actually comes through to your credit card, you're going to see an Uber transaction and an RTD transaction.
But does it offer up, okay, this trip will be faster because we can get you to the train station and then you'll avoid the traffic. And so it tells you the total traffic or travel time for the combined trip?
Oh, that's a good question.
Well, not necessarily for the combined trip, but so let me give you an example. You're at DEN, and you're wanting to go to Union Station. When you pull that up, it'll tell you this is how much your transit trip is and the time it will take you. This is how much your Uber trip will be and the time it'll take you. And then there's there's multiple Uber choices, like Uber shared and Black and all these things. So it'll tell you those choices and then how much it costs to do that.
Okay, does it, if you're at, I don't know, DIA, Den, and you want to get to Washington Park, does it give you Uber to Washington Park, the A line to DUS, then Uber to Washington Park, or how does it do that?
Currently, it is separate, so they don't combine the ride-hailing with the transit option in a single trip. You'll either get the transit trip without the ride-hail or just the ride-hailing trip. So,
yeah,
but I don't know if that's part of their enhancements or plans.
I hope we can pursue it, because ultimately, I think that will result in a better outcome for everybody.
But you can go to DUS and then get the option from DUS to.
Yeah, but it wouldn't calculate it for you to figure out the best trip overall.
Correct. Not yet.
Thanks.
Okay, thank you. Director Williams.
Thanks, Chairman Halleck. Hi, Tanya. Are we talking to the other guys?
To the what?
The other guys?
Yes. So
Lyft, that would be Lyft.
Yeah, so we did do a project with Lyft regarding journey planning. So, but they have not been pursuing the other option of selling tickets at this time.
So my understanding is that it has to do with their software. They're not, it's because we share a platform on Masabi with Uber?
No, they
Yes?
have the ability to enter into a contract with Masabi also if they'd like to.
Right, but they don't have that yet.
No, and they have not pursued that to our knowledge.
Okay. And are we interested in helping them pursue that? I mean, we are looking at as many mobility options as we can get, right?
It's really up to them. It's really up to them to decide who they want to partner with for ticketing. It may not be Masabi. They may choose to partner with a different ticketing fare collection vendor to do the same thing. So,
and strategically, they may choose to do it in a different city since Uber's already here. The things that drive them from a profit or not so profit standpoint, but from a business standpoint, it's been very interesting to see how they do that and how they compete with each other, where we have been very interested in those people that want to partner with us, like Transit App, like Bustang, like some of these other things. So people have been coming to us, and so we've been embracing that as they come to us.
I have one more. So here in Denver, our new NEMT provider is IntelliRide, and they are a portion of TransDev. And I think that we do business with TransDev now as a subcontractor. And I'm just wondering if we are talking at all in all of that service with TransDev about how we interface with that group of riders.
I'll have to check with some team members on that.
I think we have something going on with TransDev as it relates to paratransit. I don't know. We need to check on that. There might be something with one of their subsidiary companies. I'll have to look at that.
Just because since we're already in bed with them in some ways, there might be some advantages to the fact that they are going to be one of the primary providers of service in the Denver area as the new HICPUF contractor for NEMT Medicaid services. And so that might be worth, since, we already have a handshake with them, to step into something that I know we have not done in the past. Thank you.
Okay, thank you. Chair Tisdale.
Thank you very much, Mr. Chairman. I just want to correct a perception that may be out there that Lyft is not interested in and is not pursuing creating a ticketing option with us, because I've had conversations as recently as today with them, and they are. There are some issues that arise, and I think that our Chief Financial Officer has alluded to some of those. But just for the sake of the record, because I think the impression could go out, and I think it would be a very negative impression, that Lyft is not interested in pursuing more vibrant trip planning and ticketing options. They are. It's not going to happen immediately or perhaps even in the near future, but it's being pursued. So to the extent that there's a sense that, well, no, they just really don't want to do this, I think that's an unfair perception. Thank you.
Okay, thank you for clarifying that. I did have one question. The validity of the mobile tickets, is that 90 days before they expire?
45 days.
45 days. My concern is just that the very first bullet point on packet page 67 is just that they're using it infrequently. And I don't know if
Well, what that means when we say they're using them frequently is these are not riders that commute every day to work or something using the mobile ticketing app.
Sure, I just don't know of how many, if we've tracked how many have lapsed over the 45 days. That,
I don't know. We'd have to see if we can get that data or not.
okay. I hope it's a small number, but I don't know. Maybe on the next update, we can have how many have lapsed.
We'll look and see if we can get that.
Okay, thanks. And I think that's all, unless Director Folsk, I'll check in real fast if you have any questions or comments on.
Thank you, Chair Mahalik. No, I do not.
Okay, thank you for staying with us. We will move on to the LIVE program update.
So Monica is on her way up, but I'll go ahead and just do a quick overview. So LIVE went live, and we're really excited about that. So we've had some really good statistics as far as number of people that have made it through the system. As of Sunday, 222 were categorically eligible and were approved. That means they were already receiving benefits, and they just had to go in and apply for this particular program, and then as soon as they have a photo in, then they're approved. We had 18 that were approved by Denver Human Services, which means they were not in the system before and they had to fill out the full application and go submit their income information. So they've made it through the process. So that was 240 as of Sunday. So we're still working on the card printing and getting that vendor, and I'm not sure if we have an update as of right now whether they're printing cards and mailing them or.
Yeah, they actually, in the mail, they sent us a picture.
So we have a picture that the cards are getting mailed out, so people should be able to start receiving those very shortly and using that, and then buying their discount product and being able to do that. We have had meetings, various meetings with the nonprofits. As we had mentioned in previous updates, they are not as thrilled with the program. But we have been meeting with them, and I think we've been able to address some of their questions and concerns. And we continue to meet with specific groups. I have a meeting come up with state corrections on some of their particular issues, and people getting cards and being incarcerated and those type of things. So we continue to try to work through those type of issues and see if we can make any adjustments going forward. We're hoping probably in the beginning of September, mid-September, when we're assured that any bugs are worked out, that we'll do a major push from a marketing standpoint on this project. So, and Pauletta's group has been working on that with us as to what that would look like and when exactly is the best time to make that push. So with that, Monica, do you have any things you want to add to that?
Nope.
We'd love to take questions.
Okay, thanks. And you
Very
said
excited.
the participation pace so far is ahead of what you would have forecasted?
Yes. We'll continue to see, because it was really, really, really high the first week, and then it's tapered off just a little bit in week 2, but we're still seeing quite a few coming through. So we'll just continue to monitor that and see. I think we'll see once we push out a lot of media around it that we'll get a lot more responses too. So.
Okay. Thank you. Director Broom.
Thank you, Chair. What kind of photos do you allow? I mean, do you have to go get a passport photo, or can you do it on a smartphone, or?
No, you can take it on a smartphone.
Okay, thanks.
Director Lubau.
Thank you, Chair Mahalik. I was concerned that there were a couple of articles about nonprofits basically saying that some of this program is really off of the backs of the really, really poor, because I guess they were giving a 50% discount, and the discount we're giving now is 40%. Is that the source of the anguish about this?
I would say that's not the source of the anguish. I mean, some people are concerned about that. Remember, the actual recipient tends through a nonprofit to get that for free. So it's the nonprofit that's absorbing that 10% discount. I think more what we've heard is around those people that are not here lawfully, and they're concerned about putting their information into a state program database. And I think we've been able to alleviate some of those concerns as far as our privacy policies, and we've been publicizing those. There are still going to be people that are concerned about that. And then I think the others around the immediacy is what we're hearing of getting that card, that a lot of the nonprofits help people that are very transient. And so how can we help provide information as to how they get their card, where they can mail their card instead of a home address, those type of things. And so we're working through some of those issues also.
Okay, thank you. Because I am concerned what they had been raising is that the very poor seem to be having trouble with this. I don't know if...
We're not seeing that from the numbers that we're seeing. But again, we're only 2 weeks into this process. So I think it will take some time to see, what our numbers are as far as uptake, and we're continue to have consistent conversation with various nonprofits and their particular individual needs.
Okay, thank you.
Thank you, Director Lubau. Director Rivera-Malpiede.
Thank you, Chair Mahalik. We all know this is close to my heart. And I want to thank Heather, your team, Michael Washington, Teresa, and Danny. You guys have really done amazing outreach work in meeting with the nonprofits who have had some serious concerns. I would just state that in Globeville, Swansea, and Elyria, there are 12,000 households with a median income of $24,999. So we're talking really, really poor. We're also talking an immigrant community where they're very fearful of doing anything and providing pictures or any additional information. So I think that this has been a real interesting transition, and I think it's going to take all of us to just keep talking to each other and working things out. And I'm seeing that happen, and so I'm very pleased about the process that we're making. I still have a lot of concerns, but I think that calling the team and being willing to come out and meet with us has been instrumental in terms of talking. I'm really pleased you're talking with the State Corrections Department, the Homeless Coalition, all of those folks who are dealing with some really serious issues with their constituent bases. And so I was reading all of the stats. I think they're great. I think that I really appreciate the information about who was denied, why they were denied, how many of those numbers are going, because those are factual pieces I can take out into the community. But more than that, I think that this is now representative of the spirit in which this came to fruition, number one, and the outreach that is happening, and that things are now in Spanish, and I'm going to think we're going to need more in different languages, but that outreach is really crucial at this point. But I guess my comment is really just to say thank you for being on this ground with us and being willing to hear and be flexible and change things up or give us the information of why it can't. So thank you.
Thank you, and I would add, I know you've been close to this issue, so we've been trying to work for it. I just want to make sure people know I don't think we're going to be able to solve all of the concerns, but we're trying to figure out which ones we can work through. I did want to bring up one thing that we thought is quite interesting, is that the majority of people are getting denied are because of age. So it means that they're eligible for a better discount than what we can offer them through their LIVE program. And we also have heard that for Denver Human Services, they're getting a lot of questions about, oh, I didn't know this, that there was other discounts. And so one of the things that pointed out to us in just 2 weeks is that we need to do a much better job about promoting our senior and our youth discounts, which are higher discounts, because there's a lot of people that apparently don't know about it. And so that's one thing that we've gotten out of this process so far is that we want to make sure people are aware that there are other discounts available to them depending on what situation they're in.
Okay, thank you. Chair Tisdale.
Thank you very much, Mr. Chairman. I just want to affirm what Second Vice Chair said. I think it's absolutely wonderful in terms in the spirit of transparency and communication. Packet page 70, that description of who applied, who was denied, why they were denied, who was approved immediately, how it all worked. That's fantastic. It's great information for all of us to have. Thank you for providing that information. Keep it up going forward. It will be very useful to us. Thank you.
Thank you.
Thank you, Director Williams.
Thank you, Chair Mahalik, and thank you, Heather, and your whole team. I was over at CDPHE this morning to their advisory council, which was about 25 nonprofits of a variety of types, with Michael and Therese, and it was very interesting to me that, yes, that was one of the things that happened, is that they did not know about the youth discount or the senior discount. They did not know that you did not have to have some kind of a formal portrait in order to qualify. They were grateful to learn about how simple it is, actually. But the biggest complaint of all, oddly, is that they think that the peak system itself is unpleasant and unwieldy and not user-friendly, and that had kind of rolled over onto us. And unfortunately, I can't sit in the back of the room and be quiet. And so we had some discussion about the fact that that is Peak's problem, and that we had saved a lot of time and effort by contracting with those people who are already doing benefits, and about the fact that we are, in fact, not a human service agency, but that we are, in fact, a transportation company. I asked the room how many of them had mechanics. And they didn't. Nobody there had a mechanic. So I pointed out that RTD didn't have any social workers. And that, they were the human service people and we were the transportation people, and that we needed their help to make it work. And we had some good conversation about that. So I think, as Angie was saying, as we walk it, and everybody learns how it works together. But I think you guys have done a phenomenal job. It was a great presentation this morning with good information. So thank you all very much for that.
They thought it went well, so that was good. I can't, say enough about Denver Human Services too, and the Office of Information Technology at the state too, because they've been wonderful and they have been responsive to bug issues that we've come across when people report them, and we've been testing. And Denver Human Services is actually looking at every application that we get, those that are rejected for whatever reason, just to make sure that there is no errors in what's being processed and bringing those forward. So we won't be doing that forever, but for a period of time, they're doing that and looking at every application. So.
Okay, thanks. Director Catlin.
Thank you, Chair Mahalik. I was going to say the same thing that Kate was going to say, that transportation is our core mission, and we are not social service providers. So thank you. I just wanted to reiterate that. But I also wanted to say that you mentioned, Heather, that there are some glitches and there are some concerns in different areas. But to quote our chair, don't let the perfect be the enemy of the good. And I think that there are so many people that have benefited and will benefit. And in spite of some of these misgivings or challenges, I think that in balance, it's shown to be a good program. Thank you.
Okay, thank you. Thank you, ladies. I think we'll move on to, thank you. I will check with Director Folska, see if she has any questions or comments on this.
No, thank you, but well done.
Okay, we will move on to other matters this evening. Chair Tisdale.
Thank you very much, Mr. Chairman. I have other matter that I'll bring up during the second committee meeting at the end, but I wanted to recognize, if I may, and yield the floor to our general manager relative to the transportation transformation survey that you may not have had a chance to look at yet. If I may yield to our general manager.
Okay. Thank you, Mr. Chair. So earlier, right before the meeting, I sent an email to the full board regarding a very brief survey to help us take a look at some suggested guiding principles for the Reimagine RTD. So you'll recall that we talked about that last week at the Planning and Fast Tracks Committee, that we were going to be sending out a very brief survey. So when it's an anonymous survey, so you're not identified in it. So I wanted to make sure that was clear. I put that in the email. And it basically, when you open it up, we have about 10 suggested or proposed guiding principles that we want to start. We want to get your feedback on in terms of what you think of those particular 10. We're asking you to select 5 of those, not to rank them or put them in a priority, but to select 5 of those 10 that are, and it's always challenging to do that, right? Because they're all important. But we just would like to get your feedback on that. And then the second part of it is for you to provide suggestions if there's a guiding principle or value that you have in mind that you want us to consider before we come back and talk about these at the study session later this month, that you could provide that feedback. So if there's something that's not on that list of 10, then we want you to feel free to suggest what you may propose as a guiding principle. And so that's about the state of the survey. We'd like for you to complete it by next Tuesday, and that date was included in it. And so it's just a Survey Monkey, pretty simple format. If you have any questions about it, Bill Soroy is the contact person. So his email and phone number are in the email that I sent to you earlier. Thank you.
Okay, thank you. Any other matters? Not seeing any. We will meet next month on the 17th, and we will call this adjourned. 5 minutes?